Now for the bottom line, our regular weekly look at a company facing a critical challenge. Tonight we revisit a company we profiled last fall, the Canadian network builder Nortel. At the time, Greg Clarkin reported that there were concerns about a slowdown in the breakneck pace of network building. It's now crystal clear those concerns were well-founded. Peter Riles now with an update on the bottom line at Nortel.
Come together.
In fact, with technology changing
Over me.
That rock and roll ad campaign was a crowning moment in Northern Telecom's transformation from sleepy Canadian phone giant into new economy superstar. But now comes the hard part, surviving a brutal shakeout in network building that started when the internet bubble burst a year ago and may last through this year and next.
The next couple of years really become an issue of how well can Nortel control its costs, and when can we see glimmer of hope in the future. So yeah, I think that we're probably going to reach the bottom where there's all the bad news is out on the table in the next 3 to 6 months.
The problem facing Nortel and its rivals, Cisco and Lucent, is in many ways the Achilles heel of the entire U.S. economy. A dramatic slowdown in what had been the fastest growing part of the economy. The internet explosion created a virtuous cycle, a surge in demand for new network capacity to move all that data back and forth, which led to a furious leverage build-out as new and old telecom companies rushed to build new networks to carry the data, which in turn created huge demand for networks and networking equipment, which helped drive Nortel stock up 600% in the 2 years that ended last September. But sometime last year, the virtuous cycle turned vicious. Internet businesses began to collapse. There were fears of excess networking capacity. New telecoms suddenly were unable to raise money and faced a debt crisis. The building boom ended, and demand for networking equipment plunged, and so did prices.
The pricing on wireless systems have come down hard, probably in the order of 30 to 40% rates.
Nortel's stock has fallen even harder, down 83% from its peak. The main question for investors considering Nortel, when will the network build-out resume? For now, the buyers are still cutting back.
We did a survey of 33 North American service providers, and what we found was that the current rate of spending is expected to be down in 2001 over 2000 levels by about 3%, and we're expecting further reductions in the spending budgets, and wouldn't be surprised if the year ended 5 to 10% below last year's level.
The slowdown has had a dramatic impact. Nortel revenues, which grew at 42% last year, were first projected to slow to 30% this year. In February, the company revised that down to 15%. But Lehman Brothers now projects revenue growth of just 1%. Nortel is cutting costs, 15,000 jobs, but it cannot control the health of its customers.
The indebtedness is very, very high. Realistically, we have a couple years at least of very, very slow capital spending before we can get close to seeing a re-acceleration. So we're not calling for a real improvement until well into 2002, maybe even 2003.
A year ago, analysts believed data traffic was doubling every 3 or 4 months. Now, that growth rate has clearly dropped sharply. But still, analysts do believe the equipment business, once this shakeout is over, is capable of growing at 15 to 20% per year.
So still considered a growth industry.
But we've learned also a cyclical industry.
That is for sure. Peter Riles, thanks.